Okay, so first of all, I will quickly allow you guys, do you want to do quick, brief intros, or should we just go straight into the meat of it all?
Up to you.
Up to you. Okay, we'll go down the line. Quick intros then, in case I miss something out.
Yes, maybe the most important thing to point out is that I'm not only speaking about my own research, but I'm also the executive director of Netspar, the network for studies on pension, aging, and retirement. We have around 400 researchers affiliated with us with all kind of backgrounds who do very interesting, relevant research. And we bring all that knowledge to the pension sector in the Netherlands, including the insurance companies in the Netherlands, but also regulators, ministries, pension funds, administrator, social parties, so trying to bridge the gap there. And so there's definitely also interesting research on financial education that I can talk about. And to spoil the party a little bit, as while I can share what works and what doesn't work, I also want to state there are limits to what you can reach with financial education. And if you really want to make progress, systemic changes are needed.
Thank you so much. Continue going down the line. Please introduce yourself.
I am João. I'm from Portugal. I've been a member of the European Youth Parliament for 9 years now, so maybe not so young anymore. But we are a political education network across 40 countries in Europe, and we talk insurance, and pensions is one of many, many topics that we talk about. I bring a perspective of around 20 young people that I worked with for a period of 6 months within 2 of our flagship events that produced a youth vision on the future of pensions for Europe, trying to understand, obviously, very different contexts and very different priorities that exist in different countries. We had a very wide range and a very diverse range of participants. But yeah, I'm mostly here to try and give you a perspective from young people about a topic that's maybe not so much associated with young people. I am not the only young person here, nor the only young person in the world. Keep talking to young people, please. It's very important for us to be heard, and yeah, I'm sure you will.
Indeed. Please, Elizabeth.
Thank you. Good afternoon, everyone. I'm Elizabeth Oy. I'm a policy analyst at the OECD in the Consumer Protection and Financial Education Division. And I really kind of just want to echo Connie's presentation around the importance of putting the customer first, because I think traditionally policy making is thought of as a top-down approach where we start with principles, it feeds into legislation, it goes into regulation, and it trickles over consumers. But really the bulk of our work is understanding people, their knowledge, their attitudes, their behaviours around things. So we have, at the OECD, we have all of our policy work based on these sources of evidence from people. And I'm happy to talk about those work streams. Thank you.
Please, go ahead, Dana.
Good afternoon, everyone. I'm Dana Filip, Deputy CEO of GA Europe. I'm so grateful to be here, and really kudos to you to putting the spotlight on the next generation. While the insurance companies are the largest investors in education for young people. So I'm going to tell you more about that, but that's why we do a Junior Achievement. Junior Achievement is the 5th largest global NGO in the world. We exist since 1919. It started in the States. It grew in 120 countries globally, and in Europe we are active in 42 countries. We work with young people from the age of 5 up to the age of 25 because we want to build learning bits every way from when they are in the kindergarten up to when they finish their work. So they really get a sense of it. And it's not just teaching financial literacy from the book. It needs to be practice. So everything we do, we combine entrepreneurship with work readiness and financial literacy to inspire them to be ready for the world of the work.
Well, if we're training them from kindergarten, I mean,
I'll tell
that's
you
going to be
what.
something. Very precocious children there.
Well, maybe I can start with an anecdote on that.
Sure, go ahead,
because when my 7-year-old came home one day after being in our program, said, "Mom, I know why you cannot buy me Lego anymore every week." And the lady from Lego is not here anymore, but he was telling me that today at school, we learn how economy works. We learn how money fluctuates in the economy, where do you get your salary from, how are you paying, who's paying the taxes, and everything. And I would not have been able to explain that to him, but because he heard it from a business volunteer, somebody like yourself who go into the schools and really inspire them, this is how it stick to him. So it was really a role model that came and inspired
Okay,
him.
so that's a nice idea for all of you who want to start volunteering at your kids' schools. So you look cool in front of your kids. Hands up. Okay, there's one. Okay, there's a few of you want to be cool parents. Okay, great. Okay, well, as we can see, there is a word cloud behind us, and these are some of the words that young people have come out with to when they think about, I presume, the relationship to money. I can't. Oh, it's there. Perfect. Craning my neck there. I can't make it out. So, guys, I'll start with João first, and then perhaps Professor Lisa. When you look at these words, what do they signify or tell you about the relationship that young people might have with insurance, money, all of that dynamic? Perhaps João first?
Yeah, I think it creates a pretty clear picture for me. It's a two-faced approach. It's the safety, it's the health, it's the peace of mind, but it's also the expensive and the complicated and the money. An accident in the middle, but I think it really creates a picture of a generation that's pretty divided about what insurance means for us and what even financial products broadly, but especially insurance. I think a lot of us still associate insurance with preventing a future bad event from being even worse for our finances or being even worse for our livelihoods. But there is also a very clear lack of information, trust, I would say even credibility that we associate with the insurance industry. That's not necessarily an indictment on any actions of the industry itself, although, you know, I think it's very important that we start understanding that there is maybe not the same relationship that previous generations had with the insurance industry that this one has. I think we're more skeptical, more fearful of where we put our money.
Why? Let me ask you why.
I think broadly there's two main reasons, really. One is it's too complicated. We are much faster paced. We are often Gen Zers associated with TikTok. I think that can go a little bit too far in its association.
We'll burn that idea today. We'll burn it, okay?
But really, I do think we do expect things to be explained to us faster and more simply and more rapidly. And I think the insurance industry has not yet caught up to that. During our discussions on the other side of the hall, we've definitely heard repeatedly, I don't understand what is in this policy. I am very afraid that I take out this policy for my apartment contents. I will not be covered once it floods because probably something in the policy, probably some fine print. And then there's another side, which is we are more economically and financially insecure than the generation that came before us, which is a first in many, many, many decades. That's just something that always is going to be a conditioning for us. We do not know necessarily what we are supposed to do with our money, not only necessarily because we are less financially literate, although maybe we are, but also because broadly we have less money and we have less security.
Okay. Well, let me then go to our professor then, Lisa. I mean, what's looking, I mean, it's interesting. I mean, unless my eyesight is failing me, I don't see the word trust there either. Isn't that quite interesting?
So what I really love about this word cloud, I think, is that it gives a very good idea of the underlying needs and wishes of young people. And there's a nice link also to the previous presentation to really focus not necessarily maybe so much on what they say, but really these underlying needs. What I find striking, though, is then you would think that insurance could be a good solution to a lot of the underlying needs, and still many young people find it challenging, as we just heard, to really get insurance. Or my work is mainly on the very long-term financial planning, retirement planning. And you don't really see that back. And there's, luckily, a lot of research about that. So we know, for example, that always the here and now weighs more heavily than the far future. That's one reason which makes it challenging to get young people to engage with retirement planning. We know financial literacy is a problem. That's where education can come in and help. We know that even if they know what to do and they are motivated to do it, they can maybe lack the self-control to do it. So there are lots of different reasons that can prevent people in general, but maybe young people even more so because of especially these time differences to these long-term financial decisions. And I think that's where it's challenging then to find the good responses to overcome these problems. And financial education, that's maybe a bridge to you, I think can be part of that story. But later I'm also happy to talk about some research that shows, unfortunately, also the limitations of it, the limitations in terms of the effectiveness. And so it depends on what the goals are, but it's also important to really think about what are the things we try to solve through financial education, and what are the things that we maybe solve through things like auto-enrollment, auto-escalation, opt-out, smart defaults, and other systemic solutions.
So is it, I mean, I'll ask both of you now then, perhaps Elizabeth, you can go first. Is the major problem here that we're looking at the lack of communication or a lack of understanding of younger generations? What's really going on here for you?
Yeah, I think, so to answer that question, but also to tie it back to the words, the words that stand out to me here are safety and peace of mind, which are both things that are very difficult to put into a model. They're not quantifiable. And so part of the communication that we can work on with younger people in particular is asking them what they mean by that, because that's going to differ based on culture, language, the different socio and political systems and experiences that you've lived through. And so with communication of financial education, I think back in the day, the focus was probably more on knowledge, explaining definitions, explaining key terms. Now it's on things like financial resilience, well-being. There's a lot more focus that Diana will probably talk about on things like attitudes, perspectives, things that are difficult to, or just, the definitions can be varied depending on the experience that someone goes through. So I think our communication in terms of how we deliver financial education can focus on these probably more fundamental factors that eventuate into a person's level of financial literacy.
Yeah, I mean, there seems to be nowadays in modern society, there's more nuance, there's more understanding as to, you know, people being different and having different needs. And I think that's really perhaps where the disconnect's coming from a little bit, would you say?
They need to understand what they can use it for. And that's where we come in when we combine it with entrepreneurship. So we put them into the shoes of all of you in the room when they have to create their company. And when they create the company, they see those words there, safety, money, health, because they have to analyze everything. They run from the beginning, putting together a team. They arrive at the end where they really look for stakeholders, shareholders, they liquidate so that they really learn about the whole spectrum. But to give you an example, a team from Romania who had nothing to do with insurance before, they developed a product, an agri-tech product in a rural area in Romania. And they realized, after being mentored by our employees from NN Group, that they need to insure that equipment in order to be able to continue with their business afterwards. So it wasn't someone putting that in them, it was them understanding that they need the tools, they need the insurances for their business. And that really triggered even afterwards for themselves personally to use some of the insurance opportunities for themselves personally. And that young person was really becoming afterwards a role model for the other ones. But because she understood how it really worked from a business perspective and what was the link there. So I think if we just go and give them a list of different tools that you have and you want to sell that to them, that will not work. But if they really understand how that relates to their future, to their dreams, to their business, then we will grasp it.
Is that the way you'd go, Elizabeth? Because, I mean, to bring up a stat, 80%, according to, I think, a survey conducted by Insurance Europe and the European Youth Parliament, show that 80% of young people basically have insufficient financial education. So what are the tools to build it?
Sure. So at the OECD, we have basically set up a series of elements in a policy framework to really push financial education. So we have things like, well, we help countries to develop national strategies for financial literacy and education and inclusion. We have our PISA assessment for understanding financial literacy in schools in particular. Through our work with national strategies, we really see the variation in how financial education is delivered in schools. Sometimes it's in curriculum, sometimes it's not, sometimes it's delivered by teachers, sometimes it's external parties. Depth of coverage of different topics varies, and the message that we want to kind of put forward is that it should be different. It should be different across countries. There is no single way to deliver education. Diana mentioned role models. One of the really useful and successful initiatives in financial education is train the trainer programs, where you take someone from a group as a representative, you train them up, and you have them deliver the financial education to that group. It's going to work in most situations because it acts as a role model. It's way more relatable than an older person trying to figure out how to speak to younger people and probably failing. And it's just going to resonate much better. So those kinds of things work, and there are different approaches across different countries. And from our international work, we see that the variation is there. It's necessary as well. So it's helpful.
But João, are older generations then failing to talk to the Gen Z and the younger generations as well? I mean, what for you is a disconnect? And perhaps we should come to the cringe factor. This is something that we really wanted to talk about, the cringe factor, when we see older generations dancing themselves into the twilight, trying to gain the attention of your generation and the younger generation. I mean, yeah, talk us through all of it. For you, what works, what doesn't work?
Again, I am not all young people, but I think it's a pretty universally held opinion that it is cringe to see someone do a goofy dance on TikTok to try to tell you, get life insurance. It's not how it works, and it obviously wouldn't work with our parents, it wouldn't work with our grandparents, and it's not going to work for us because it does appear to be pandering, and it infantilizes, I think, Gen Z to a degree, and even millennials or Gen Alpha. I think we want to be treated like adults, and we are a tough crowd, I think, very often. We perhaps lack the skills or the knowledge of our previous generations. We're more cynical. But I think we are, as Connie was saying, I think we are a much more purpose-led generation, at least in my perception. We want to be told not necessarily, oh, if you don't invest in a third pillar pension, you are going to be poor and you are going to have terrible time after retirement. You're not going to be able to retire. I think it's much more effective to talk to us in the sense of what can this bring you? What can you create by accessing this financial product? And I think the role-playing aspect is very important from an early age, and it kind of ties in also a little bit with our work in the European Youth Parliament, where we try to put young people in the role of legislators. And we're talking about Ukraine, we're talking about energy dependency, we're talking about fisheries. It doesn't necessarily matter so much as to understand the role that dialogue plays in the shaping of policy, in the shaping of legislation. And when it comes to financial literacy, it really is not my forte, so to say, and I would really yield to your expertise, but I think there's no reason in my mind to think that it wouldn't have the exact same benefit to it. We don't understand it, and it's not necessarily because there was no lecture on it, it's because there was no hands-on time to practice it. So I would say that. We might be cynical, we might be a tough crowd, but we do care, and we do want to learn, I think.
Do you think that because there's also this disconnect, and then we're living through a time when costs are so high, that insurance is something that falls to the wayside because it can't be effectively communicated to younger generations as well?
Absolutely. I think we undervalue the value of insurance. Don't get me wrong. I think it should be on our radar more. It's increasingly difficult not to think that the priority needs to be the short term, the short term, the short term. And that's obviously a mistake, and that's what leads to greater problems down the line. That's why I think the question of purpose and what this is going to bring me as opposed to what it is going to prevent in the future is even more important. So
Yeah,
I
and
totally
I think,
agree.
we spoke about it earlier as well, as a society we need to champion the right voices, because nowadays there's so much toxicity, especially when you go on social media. So, and that's very bad for the mental health of not just of younger generations, but for everyone. When you see this toxic approach, the loud, shouty voices, they're all there. So, I mean, how for you then, you were talking about the kindergarten, starting young. I mean, how does the insurance industry start communicating the right message to young people from that age so that they listen to you rather than think about, I don't know, some person, some toxic person, I can even think of it right now, who needs insurance? Just go to work and earn a decent living or something. You don't need any of that. We'll take care of you. All the kind of toxic stupidity, I'm sorry, that you see online. There's no reason to it.
So first of all, maybe to explain a bit how we work we have a partnership with the Ministries of Education in all the countries where we operate. Only in Europe, we work with 80,000 schools. We impact around 6.5 million young people. So when we work on the programs, they first need to be vetted. We develop them, we work with them together with the private sector to really be vetted by the ministry in order to be able to implement them. And indeed, when we have the business volunteers going into the schools, working with the teachers and with the young people, they bring in examples that are very real, but focusing on the methodology that we have already approved and implemented in schools. So sometimes we have bites which inspire the young people, grasp their interest. For example, with the NN Group, we managed to inspire, thanks to their investment, 100,000 young people in 5 countries to really look at their future and build on their skills and aptitudes to have jobs or get into jobs or create jobs. And we were looking at very vulnerable areas, and we got mentors. It was 200 of them, that the employees that went into schools and really worked with us on the way. But when they are young, they learn basic concepts. When they go to the primary level, they go and learn a little bit more about different aspects, how to put together small projects, and what are those projects meaning? What are the things that makes those projects last, and how can they really sell them to their families and all those? And when they are into secondary university, then they start their mini companies. And then they start to really understand how insurance works, how they can use it for their business, how they can use it afterwards for themselves. And I wanted to pick up on what you said about when you teach financial literacy just standalone without the practice, they might not retain the same. And we've done a study with 100 teachers. We asked them, okay, you run the same program inside our mini enterprise project when they really test and they put it in practice, and the other course you run with half of the class normally as you do it. When they went for exams, guess which students had better scores on the exams and which students understood? The one that practiced. So then the teachers thought that it's very, very important to let them think. So at the beginning also, when I saw this cloud here, the way we would approach it, we will give it to them and ask them, what do you think? How would you respond to that? Let them be part of the solution. Sometimes we work, especially when they are at the older age groups, we do hackathons. We give them a challenge, probably the challenge that was presented before by Zurich Group. What can you do to make the insurance sector more attractive to young people? Let them say what it is and get them some suggestions and solutions. And maybe one last thing, and maybe I'm speaking too much.
No, please.
You did mention the influencers and the TikTokers. Well, when the war started, we thought that it's our responsibility to go and support Ukrainian youth across Europe. We didn't know how and where we will reach them, but we really wanted to reach as many as possible, to provide them opportunities to learn how to start a mini company so that they do something, but also to have a purpose. Because we talked a lot about purpose. When they have a purpose, then it's really changing their perspective. So we worked with Ukrainian influencers. We trained them to really approach the educational aspects and to inspire their peers. So we managed to impact 300,000 Ukrainian refugees through the influencers, and because the influencers were the ones who were talking what we wanted them to tell to the young people, but it was peer-to-peer, they afterwards continue and took the courses, and many of them even created companies. And now our team in Ukraine is one of the most active among the network. So peers really count.
So you created the right sort of streams for communication within social media. Lisa, bringing you in then, because you were talking about the data that you have, but it seems as if when we're talking about the next generation, they have obviously a different kind of spirit and a different approach to work as well, more entrepreneurial. And then also, let's not forget that horrible thing that no one wants to remember, the pandemic, where so many of us ended up, working in our pajamas at home, working differently, and it has also changed the mindset. So do you think that changes the mindset of older generations as well when it comes to how they approach and how they can see in which younger generations will work for the future?
Ooh, that's a very good question. And maybe before I get to this, let me briefly also come back to this discussion here, because actually the OECD has defined financial literacy very broadly. It's more than pure knowledge, right? It also includes the confidence, we sometimes call it self-efficacy. It includes capabilities, it includes perceptions and behaviors. When I already mentioned that a lot, so there's a meta-analysis which basically says we take all the studies out there in financial education and look at their effects, then they've seen that the effects are rather small. But then if we also look at a lot of the work that has been done, it focused a lot on purely knowledge, right? It was really about, do you understand what compound interest is? Do you know that stocks are riskier than bonds, That doesn't really help you to buy a good insurance product or, get started with your retirement planning. So what both of you already said is that it's, we know that luckily nowadays it's so much more important to focus on capabilities and to focus really on the confidence, and that people know where reliable sources are that they can turn to for information. And that's probably even bigger challenge with, you already talked about, sort of a lot of the self-claimed experts out there shouting everything. I think that's a little bit the challenge facing there. And also what we see there is then often the type of financial education that works best is also just-in-time financial education. So when people are finally motivated to get started, for example, with their retirement planning, or they realize I need an insurance or whatever, that then you want to be there to really support them and teach them then also, okay, what are the trade-offs you need to be thinking about? What are even, the factors you should be looking at? And that's, I think, where also a lot of the base knowledge you've built up can come in handy, because if you read about that, that makes, again, much more sense. I think the challenge that you're asking, and I'm afraid to say that on that end, there's not that much research out there yet, but I'm really looking forward to stimulating more research. I think, of course, so I've actually published one study myself on financial well-being and the end effects of COVID, and there we looked at the financial well-being, but also how that really affected all other aspects of life, right? I mean, these things are closely intertwined as well. I think we still need to look much more at also more of the long-term consequences of that into the future. And then I think one challenge we also have in our research is that a lot of the research actually relies, for example, on surveys. So, we work with an online panel, for example, or any other way of inviting people to participate in our research. But guess what? Young people are not that interested in participating in research on pensions, for example, long-term financial planning. And it's really an issue. We already discussed this in the pre-discussion. We need their voice, we need their input, we need all of that knowledge, but there's also a bit of a research challenge as well. So I love the example from in the previous talk. So maybe instead of doing that research quantitatively, maybe we need to do more ethnographic research and, really immerse ourselves more to really get into underlying needs and what would work and not work.
Okay, well, you brought up pensions. So, João, of course, you drafted this, opinion on pensions. So, talk us through what that said and what it found.
All right, co-drafted, to be
co-drafted,
very clear.
okay, sure.
As I said, 20 young people worked on it broadly. It says quite a few things. Broadly, it points to firstly, the insecurity that we are feeling regarding it. And I think the maybe main 3 points that I would touch upon are we need more flexible pensions. That is a very key priority for young people. That we, as a generation, expect to be moving countries, to be moving jobs, to be moving all circumstances of our life, probably much more rapidly and frequently than our parents and our grandparents. And it needs to be sort of baked into the expectations of insurance or of pension providers that if I move from Portugal to Germany, which I have, my pension should be trackable, it should be accessible, I should not have, it should not have a negative effect on my well-being or on my financial, on my financial well-being after retirement that I moved. And that really is sort of the low-hanging fruit of it. We need that flexibility in order to even consider starting to think more about pensions. The second thing is also related to this insecurity or more frequent change. And it's really a point that I'd highlight is there needs to be a greater pillar diversification, which I don't think is a news to anyone in this room. But from the consumer side, so to say, or from the pensioner side, we really believe that we need to make a big focus on workplace pensions, so occupational pensions. We specifically call for the establishment of auto-enrollment, as you mentioned, and sort of catch-all backup systems. Probably not using the best terminology here, but the example of the UK, you have the Nest program. So if you're not otherwise insured with your employer, maybe they're too small, maybe you're a gig worker, maybe you have something along those lines. That is a very big focus for us. And it's really, I think, across the 2 flagship events that we did this committee work in. And this was, I think, the most consistent thing. In a sense, it's a bit like a 2-timed trial. We really wanted to see which opinions came up again. Some didn't. One of the groups, for example, called for harmonized pension systems across Europe, and one really did not. And I think it was the safer choice not to put it in the paper. But broadly, workplace pensions and occupational pensions were a very big focus. And then lastly, just a focus on preventing absolute poverty and a focus on ensuring that regardless of everything else, there needs to be a minimum standard of living that's ensured for even the poorest among us in society, especially for women who, of course, face a much bigger pension gap than men broadly, and which is bigger even than the gender pay gap. People who have, for any reason, either due to disability, immigration status, any other legal difficulty, shorter working careers. These things were very much also on both groups' minds. And I would say that those are the 3 main ones. I really recommend that you take a look at the paper. As I said, I really mostly facilitated the process. These ideas are from 17 to 19-year-olds all across Europe, and it's really a fascinating look at a topic that they'd never seen before, and that suddenly they know what DB and DC and first pillar and second pillar means, and it's one of many things that the UIP has done that I think is very interesting. And I think it goes to show that Insurance Europe, not only because they gave us money, but also because I do think the attitude matters here. That needs to happen much more often, to engage with young people from that stage, from that public policy perspective.
Well, one thing you brought up was the trackability across member states. You said that you moved from Portugal to Germany. So where does the sort of the traceability element of perhaps blockchain technology come in? Who wants to take that question? Would anyone here want to? Yeah? No?
No, not
okay,
me.
no. What about the audience? Does anyone have an idea here in the audience?
I have some thoughts on that as well.
There we go.
So I was also for a while, I was academic advisor in the European Tracking Service. This platform which is meant to support you in sort of, getting an overview. Great. I also, by the way, I supervised a PhD student in a law faculty, and he worked a lot on cross-border pensions, and he initially wanted to do that across more European countries. Eventually, he already wrote 1,000 pages only about the comparison of Germany and the Netherlands. So it turns out that from so many perspectives, including also tax perspective, it's really still extremely complex. And while I think it's good that there are national differences, and probably harmonizing all of that across Europe is neither feasible nor, I think, desirable. There are definitely currently also lots of challenges still in that space. Actually, in the Brightlands Institute for Smart Society, we also have some projects on blockchain, and I think it's very interesting in a sense, because if you want to connect data anyways, and probably even more so across countries, it's often super difficult. You're really running into GDPR and all kind of other problems, and so there is a lot of work being done on privacy preserving technologies that are often use blockchain, but there are also some other ideas out there. And there, for example, you wouldn't have to necessarily transfer the data, but you have more or less an algorithm that stops at all of these different places, runs the analysis locally, and only exports the results. And so that could potentially be an interesting approach to make it easier and also more privacy preserving to actually bring all of that, not information or the results basically together. Having said that, we're actually running some use cases more on debt prevention in the Netherlands, where municipalities have actually an obligation to do that, and so you could think also of signals from different parties. There are still not only technical challenges, but there are also still enough other challenges in that area as well. But I think it's definitely also worth pursuing and worth looking into this, whether that in the future could also bring some solutions, because I think it often starts also with good information. Then it's challenging to bring people to look at that information, but if the information isn't there, then that's also already a problem.
Really nicely put, because I find blockchain really fascinating. Okay, so we've got less than 10 minutes now. So we'll go to the audience questions quickly. Can digital tools help deliver financial education to a wider audience? Well, I think we've sort of already covered that one. The next one we'll go to is, some studies show that among financial illiterates, 60% are women. Did a man write this one? Just kidding. At the same time, women are more exposed to the risk of poverty in old age. Yes. Are there ways to better reach girls and women in financial education campaigns? Who wants to take that question?
Can I make one comment?
Yes.
So there is indeed lots of evidence that females go worse in financial literacy than males, but there's a super fascinating study where they showed that if you remove the don't know option, they score equally well. So it's more a matter of confidence.
Because women second guess.
Well, they don't feel confident. They don't feel confident, and then they often say don't know, and that's why they seem to score lower. But if you force them to answer, there's no difference anymore. A really good paper.
Okay, so just yes or no answers. Okay, brilliant. Let's go to the next one. I don't quite understand it. Some of it's missing, but it says, why many states are not providing financial and insurance education in school curricula? I think that's probably a question for you.
Unfortunately, they are not, because it's not part of what they need to study in the normal curricula. So they are embedding part of it into some of the courses. But what we are trying to do, we are trying now to see how we can work with ministries to embed some courses in all the schools, and we managed to do that in a few countries. The Nordics are very strong on the penetration, but it's always with the practice, combining entrepreneurship with financial literacy. There we arrived at 100% penetration, but indeed I think there is scope for more. But we need to all work together to lobby for that. But it needs to be very much linked with practice.
Okay, yeah, go ahead,
Yeah, I can add to that as well. The issue is that for many countries, is that if it's in the curriculum, it has to be tested somehow. And if it has to be tested, it has to be delivered in a certain way. But there are a variety of ways to do it, and it depends on affordability, it depends on the training that's provided, the resources that are provided to teachers as well. So what we see is actually that across countries, there's very few countries that put it in the curricula. Mostly it's spread across different subjects. It's not a standalone unit. often it appears in obvious subjects like maths or business. Sometimes it's in geography and social sciences. So at the moment, the best we can do is to find any way to get it into schools, whether it's, like I said, across different units, starting at some lower age groups in certain countries where there is better digital penetration or something like that, where it's easier to deliver online courses, or bringing in groups externally so that the teachers don't have to find a way to squeeze it into the already jam-packed curriculum. Yep. And of course then, if it's in the curriculum, you also need to have strong collaborations with the Ministries of Education, which can be difficult as well. So the overall point I'm trying to make is that it doesn't have to be in the curriculum for it to work. There are many ways that we can make it work, and it's a collaborative effort, joining together. But yeah, the curriculum is not the only way to get it done right.
Yeah. Did you want to add something?
Yeah, and I still wanted to make a comment actually on the previous question, which I think we only answered in half about the gender pension gap or the gender gap, because it's also a topic close to my heart. I wanted to mention last year in the Netherlands, the MoneyWise platform, which you must know very well, during the pension 3 days, as we call them, we always award the best initiatives at activating people. And last year, the Shell Pension Fund won. And what they did is, they also digged really deep in the data, and that they found that women less often read and consume the information that they sent to them. And then they looked at, okay, but what are the articles that resonate and don't resonate? And they found out that they also preferred factual information, but much more in a narrative style, much more written up in a different style. And they started to work with this, and they now have an entire campaign that really targeted the women more in the way that they wanted to be talked to. I guess it's a bit, also the point that you make. I mean, talk to the way the audience wants to be talked to, and they really saw the responses really going up. And I think this is a nice example of being data-driven, looking at differences, and that was male, female, but it could be younger, older. It could be, you could think of all kind of factors. Learn what works, learn what doesn't work, and then work with that. And I think they're really promising ways to go about that.
Yeah, go ahead. Yeah.
Can I add to that? Yeah, just from our perspective as well, because we can look at these across our member countries internationally. Echoing what Lisa is talking about, what do we really mean? If we're observing these gaps, these differences, is it a confidence issue? One of the things that we do observe in our international data is that it depends on what the actual topic is. So for many cultures, women are the ones that do the family household budget. So on those kinds of day-to-day management, they're fantastic. They know exactly what they're doing, they have plans. But when we're talking about things like stock investing, maybe even insurance products, those are not part of their normal activities. So I think when we observe these gaps, whether it's in pension, balance gaps, wage gaps, whatever it is, we really have to dive into it a little bit further to see, okay, maybe on average we see a gap, but over here there's not a gap for these reasons, and for over here there is. And that way we can target our approaches for policy making or whatever it is in a more nuanced way, which is what you were saying before, Mariam, about just in general we are getting into more details these days.
Okay, well, we've got a couple of minutes. I'm going to end on a slightly fun question that someone's put in. So, João, this one's coming for you. Okay, so the person asks, models, for example, in movies, magazines, could they help inspire more young people to take care of their financial and insurance needs in the long term, or start a career perhaps in insurance? I mean, is someone like, I don't know, George Clooney who's selling Nespresso, David Beckham in his underwear, I mean, do these people really resonate? I mean, how believable would this person be? I mean, obviously, we understand these celebrities, the influencers, they're being paid to do this. So how realistic is it to have these people speak for an industry when perhaps, not to be rude, they may not understand the products that they're selling?
To be totally honest with you, I think it might even work too well sometimes.
Okay.
As we see with, as Lisa said, with the question of the TikTok investment advice and so forth. I think that sometimes it works too well, but it can also just work well, period, in a good way. I think TikTok and broadly influencers, role models, for our generation, the way I perceive it, work more as a gateway rather than as a figure to be trusted implicitly and completely, although in some cases that definitely happens. You need to be transmitting a message that I will want to listen to. If you do have a good deal for me, if the insurance industry does have something good to offer to the workers of the future or the workers of the present that are starting their careers, and you find a good conduit for it, then yes, it will work. But the message needs to be good. You need to be giving us something else that other industries aren't giving. We care about our work-life balance, we care about our salaries, we care about many, many, many things. Many people care about the ethics of the companies that they work for. We are not a monolith either, but I will say, think about the ways that you're speaking to us and think about what you're selling us. Broadly though, I would say getting on TikTok is probably a good start.
Okay,
Just don't do the
amen, there
dances.
you go. TikTok, you can do it, guys, you can do it. It's been approved by one Gen Zer. Okay, on that note, we can see that our young people are there, so thank you to Diana, João, Elizabeth, and Lisa for an amazing conversation. Thank you so much.